Okay, welcome back to today's webinar, and that would be your first steps in trading. This is a Trading for Beginners workshop. Just before we start, we are sorry for the delay. Apologize there. Might be some technical difficulties going on, but just quick sound check and video if it's okay. Then do let me know in the comments. Good morning to you, good afternoon, good evening, wherever you're from. Would be great if I would know where you guys are coming from. That'd be awesome. Who are our viewers tonight? Where are you guys located? And what time is it over there? Is it afternoon, morning, or evening? Okay. So tonight is a continuation of Monday's session, which would be where you get started pretty much tonight. That would be tonight. So we're going to be doing a platform rundown, and then I'm going to cover some basic technical analysis that would be starting with candlesticks. Yeah, and we're going to touch on some copy trading stuff that you guys were asking about on Monday, as well taking a look at the equity, the margin again, just before we kick off, because it's always good to remember what's going on. Okay, Nigeria afternoon, India 5:30 p.m. All right. That's pretty close. Okay. All right, sounds good. So my name is Viro Angelo. If you guys haven't, if you just joined in or you missed out on what's going on and you're wondering who I am, just a little bit of a background of who I am. I've been a full-time trader since 2004. Started dabbling in it before that. I've been a trader myself since 2007. Been working for chief technical strategies for a couple of companies across Australia, Asia, and the US. Forex in Australia, Global Forex Trading, which is an international company that's based in the US. And then I was a chief technical strategist for Invest Financial Services or Invest Securities, which is listed in the Tokyo Stock Exchange. And then I do have my own analysis firm, market analysis firm, as well as fund management firm, and that would be the OctaFX branch. And also was member of the ATAA, Australian Technical Analysts Association, and the Australian Professional Technical Analyst. In terms of expertise, my expertise would be in technical analysis. That would be combining the Eastern and Western trading methodologies, which is the Ichimoku Kinko Hyo, as well as the Fibonacci trading methods, which we are not going to cover tonight because this is really baby steps, right? We're going back to the really basics here tonight. All right, just a little bit of a background. I've been writing articles for a couple of news outlets, including times.com, as well as publishing articles in Japanese. Also a regular in Channel News Asia if you guys are in Malaysia and Singapore. Also maybe Indonesia and the Philippines if you guys subscribe to a cable service. The IDX channel in Indonesia. Been a speaker for Invest Carnival in Singapore, BBC UK, CNBC, as well as a guest speaker for the ATAA Silver Anniversary, which is back in 2015. 2016 Invest Fair as a panelist for Invest Fair in Singapore, which is their 10th anniversary. All right, so that's a quick rundown on who I am. If you're wondering what we're going to be covering on tonight, number one, we're going to talk about understanding your equity, because it's one of the first important thing that a lot of traders kind of take it for granted, and they don't really care about what's going on with the equity, what's their margin requirement, and how is it that they got a margin call, because they don't quite understand how the equity works and how the leverage works. So I'm going to revisit margin and spread, which was already some of the question over just now, in terms of whether or not I'm going to be covering margin and spread. I will be covering margin and spread again, because to me it's a really important thing to understand the leverage, margin and spread, because some people just abuse it, some people just don't understand what it is, and they got it all wrong in terms of how to use it. How is it used to protect your account instead of using it to abuse your account, right? All right, and then we're going to be doing a platform rundown tonight. There are a couple of platforms that OctaFX offers, including MT4, MT5, C-Trader, and then the mobile platforms. MT4 and MT5 is pretty much the same. It's just the difference in coding for the expert devices and custom indicators. But we're going to be focusing on the MT4 because there's a larger community base built around MT4. It's been around for a while, pretty much ever since I started out in trading. And I want to show you how to actually execute the trade, how to buy and sell, and then how you protect your position with in MT4 using stop losses, as well as setting your target goals or target levels or take profit levels. And then we're going to cover a little bit, a really glance through of understanding candlestick to get you started in terms of technical analysis, just to give you a peek into what technical analysis is and whether or not it's actually something that you are going to be willing to learn. All right, and then before we wrap up, I'm gonna discuss a little bit about time frames and what kind of trader are you aiming to be. So before I begin, say hi. I'm saying hi to everyone in the world, I guess. Some of you guys are from Nigeria, I believe, Malaysia as well, and hope there's Singapore, and I know there's Indonesian here. I know there's India here. So South Africa, shout out, anyone there? Philippines, maybe. But anyway, we'll get rolling. Any questions that you want to ask, do type into the chat. And how to minimize loss? Okay, that's a very good question. That's already out there. Okay, we are going to talk about the basics, but I'll try my best to cover a little bit about, you know, how to minimize your losses through technical analysis. But we're not going to go in depth because that's more on the strategy side in terms of how do you look at the indicators to help you out. That will be on separate webinars. Okay, so tonight it's going to be simple. It's more of a platform rundown, what you see on OctaFX website, what do they offer, what kind of calculators that you can actually use to calculate your margin and stuff. That will be covered tonight. Okay. All right, I want to talk first about CFD trading costs, because this is something a lot of people just don't pay a lot of attention to. There is going to be a trading cost when you open a position, regardless of whether you want to go long, as in buying something, or you want to go short, as in selling something. That would be your spread. So the spread is also the trading cost to open a position. So instead of a commission charge, let's say if you go to a money exchange stall or a bank, you get charged a spread. That is the difference between the bid and the ask price. So when you open a position, you're going to start with the spread tack onto that position. So if the spread is 2, then you're going to start with minus 2 pips. All right. How much is the value of a pip? That would be dependent on your position size, because there's already a question there about 0.1 pips. What is it going to take to get that 0.1 pip? The question would be, how much is 1 pip, depending on your lot size. You know, if you're trading a micro lot size, 1 pip is going to cost you, it will be about approximately 10 cents per pip. A mini lot would be $1 a pip, so mini is $1, easy. Standard would be $10 a pip. So it would be dependent on the position size that you take on, how big your capital is, and whether or not your margin allows you to do that. All right. Calculating your profit and loss, that's done automatically on the trading platform. You don't actually have to manually count that down, because you can actually look at the balance and the equity and stuff, and it'll tell you straight away. We're going to do some trade examples, and you can actually see how it works. But again, your total profit or loss would depend on the number of trades that you have and the size of that position. Just now I mentioned the size of the position, whether it's micro, mini, or a standard lot. Realized profit and loss is simply the sum of all your profit and loss combined. Trading cost, which is built in, minus the trading cost, which is built in when you open a position. All right. That's realized. The one that you need to be watching out for is floating profit and loss. It's the sum of all of your open positions, whether it's profitable or not, against your account balance. So your account balance minus floating profit and loss, that would be your equity balance. Okay, so you need to be clear. We need to be clear here. Equity is not how much you have. It's not final yet. Okay, equity could be changing. Your account balance is final once you realize your potential profit or loss. Okay, so if you are profitable, then if you close your position, then it'll be realized, then your equity will become whatever balance the total is. But if you have that position open, it's going to fluctuate depending on the market. Okay, all right, just a quick rundown again on the currency pair. If you guys are wondering what we talk about in terms of spread, this is how you rate a currency: base currency, and then you have the counter currency. This is what we call a currency pair. And then we have two prices, which is the bid price and the ask price. We discussed this yesterday, but not yesterday, on Monday. But if you missed out, this is another refresher because I need you to be clear on how you actually read the spread. Now, if you take a look at the bid and the ask price, there's a 2 pip difference here. And that would be 2 pips, and that is your trading costs. Okay, that would be the cost of your transaction. Okay, so here we are. You got 80. How do you read the quote? It would be it's always going to be the ask price that you are going to quote it with. Okay, when you read this, you don't look at the smaller number. You always look at the bigger number here. So the Aussie USD, when there's a 2 price bid and ask, 1 AUD is equals to 89.39 cents US dollar. Okay, hope that makes sense. So we can get started. Okay, so let's refresh this again. This is written. If you need to take a note, this is time for you to take a note. This is your equity. Equity is basically the amounts of funds that's available in your account, but equity is not your balance. All right, this might sound confusing. It's not. Your balance is kind of like a final number. Your equity is your balance plus your plus your profit that's still running, or minus of your loss if you have an open position. Okay, so equity is going to keep changing until you close off that position before it becomes your balance. So remember, balance is not yet your equity if you still have a floating position. It will be your equity will be your balance if you close off that positions. Okay, so when there are no positions, then your balance will equal your equity. Okay, so going back to the margin requirement, I know that this is going to get asked because from previous experience, this is always the case. People are going to be asking about what margin is. They're not really clear about margin is. So here's another refresher from Monday about how leverage and margin trading and how it works. So let's say you are using a 400-to-1 leverage, and to open a position size of 1 million, that would be considered a mega lot. You will only need to have 2,500 in your account. Now we call this 2,500 to open that 1 million position. That's what we call margin requirement, or what is the required margin or margin required, and this is going to be set aside from your capital. So for example, to open $1 million position, you will need a starting capital of more than 2,500, like 5,000 for example, because 2,500 is going to be set aside as your required margin. Okay, so you cannot touch your required margin. Once you open a position, a required margin is going to be taken away from your total balance. So if you go with 5,000 and you open a position of this size, which is not advisable, it's just way too big. But in this example, for example, you are going to be taken off by half. 2,500 is going to go into your equity, and then 2,500 is going to be set aside for your required margin, which is untouchable until you close off your position or you get a margin call, and then that 2,500 is going to come back into your account. Okay, so leverage, well, used correctly, this is going to help you with lowering the required capital as well as the required margin. Actually, it would be more on the required margin side, but just be very careful with this. Like this example is it's a super bad example. It's just an easy way to illustrate how required margin works. But if you do have a $5,000 account, I don't recommend that you open a lot size of $1 million, because that's going to damage your account really quickly. Okay, but we'll talk about that later on in a separate webinar when we talk about position sizing, your risk management and whatnot. Okay, so the reason why I say that wasn't a really good example, last Monday we talked about 11,000 or $11 and then leverage. If you have a position that's unleveraged, $1 million, we took an example there of a profit of about a pip difference in terms of AUD and USD. The profit, if you have $1 million position, is 11,363. That's 0.01%. If you are not leveraged, which is kind of okay, you have $1 million. Your position is 11,000. That's all right. That's reasonable. If you start out with 5,000 and you earn 11,000, that would be 227.26%. That's okay if you're correct. But if you're wrong, this is going to be double your starting capital. So be very careful with this. The reason why I keep highlighting this is that you use a higher leverage, the lower your margin is going to be, the bigger the position that you can open with lower capital. But at the same time, if you're wrong, you're gonna get wiped out pretty easily. Okay, in Forex, you typically don't lose more than your initial investment because we have that margin requirement that we set aside just now. We talk about that, the margin required. That's gonna be your buffer. That would be your fallback plan. If your capital is not enough to maintain your losses, then your position is gonna get closed automatically. That's called a margin call. We talk about that on Monday. We're gonna talk about that again on Friday's session, but tonight is more of a refresher. Okay, so margin calls, this is when your available margin hits 25. You need to really pay close attention to, because I'm going to keep repeating this until everyone gets that. Okay, margin calls are part of trading, and leverage is a key part of trading. If you misuse it, then obviously it's going to come back to you and bite you in the back. Okay, so 25%, if your available margin hits 25%, you're going to receive a margin call warning. A stop out will be triggered if the margin level goes below 15%. So there are several ways for you to avoid this. I've been seeing questions here. I'm just taking a pic there in the chat, and there are people saying that they kind of experiences losses here through either copy trading or their own mistake, or just total misunderstanding on how the leverage work. All right, but number one is always plan your trade. We haven't even talked about risk management, but I'm already talking about it right now. I really need you, if you want to take trading seriously, managing your risk is going to be your number one priority, not figuring out how to get profits that's kind of like unreasonable or imaginative, but really more on managing your risk first before you enter a trade. You could also start reducing your position size, because you could be opening a position that's too big for your account. For example, $1 million position, that's way too big. Even $100,000 position on a $5,000 account, that's, again, to me, from a risk management perspective, that's going to be risky and that's going to be too big. Okay, so dumb down your expectation a little bit. Do not kind of just assume that you start trading and you're going to be a midnight millionaire. That's not going to happen. Okay. If you do need to cut your losses and exit some positions to open up your free margin to avoid margin calls, you can do that as well. So you need to refer back to the required margin for how to calculate that. And then you can also deposit more fund to maintain your margin level. If you refuse to cut your losses and you want to maintain your position, but it's going through losses and you're about to get margin called, you can deposit into your account to maintain your position. Those are your options. I don't like option number 4. I prefer option number 1. You know what you're getting into before you open a trade, and that would be the mentality that you should have as a trader going forward. All right, so again, margin level, if you're curious, that would be your equity divided by your margin multiplied by 100. Okay, so this is a quick leverage and margin required comparison table. You can feel free to just screenshot it. I'm just going to move my mouse a little bit. So you can screenshot it, but for a position size of 1,000, if you're using 100 to 1 leverage, that will be $100 as required margin. 200 to 1 leverage, it'll be $50. 300 to 1, it'll be 33.33. 400 to 1 leverage, it'll be $25 to open a $10,000 position. So you can see here how leverage works. If you're a beginner, and you think that high leverage is awesome, that would be dependent on your capital. If you have the capital to maintain by using a lower leverage, for example, a 200 to 1 or 100 to 1, that's kind of more reasonable. I think there's a lot more in terms of protecting your account. It'll come into play here when protecting your account. A higher leverage could actually harm your account pretty quickly as well. So as I said, it's a double-edged sword. It could lower your capital to enter the market, But at the same time, if you are over leveraged and you don't know what the risk is, be very careful, because over leveraging means that you think you start out with a smaller required margin, but the losses could be big. So be very careful with that. Okay, so I think we are clear on leverage, margin, and equity. Okay, so I'm gonna go through a rundown on the MT4 platform. So I hope you follow my advice on Monday and got this installed. If you just got on, we're gonna go through the OctaFX website first to quickly show you where to download it. But if you have downloaded, that will be great. We're gonna go through the full PC version of the MT4. MT4 is not available on Mac unless you use Parallel or Wine to run it. But whatever we're going through, the logic to open and close, the buy and sell, is applicable on mobile platforms as well. In fact, mobile platforms is probably going to be easier in terms of executing a trade and protecting your trade. I just prefer the desktop version, and if you're taking trading seriously and you're doing it with technical analysis, you definitely want to have the desktop version installed, and you definitely want to be trading on a computer if that's possible, because for the charting purpose, it's just easier to look at, it's easier to calculate what's going on in the market, it's easy to use custom indicators, as well as expert devices, which is automated trading if you're on MT4. Okay, so to me, the benefit is that there's going to be more information that you can view on the desktop version. This allows you to react faster to your trades. Mobile application is going to win in terms of convenience and quick accessibility. So if you're away from your desk and you need to execute a trade and you already planned that trade, you can execute that through the mobile platform. Okay, so this is OctaFX website, which is octafx.com. Wow, there's a PlayStation 5 going on right now. So I think if you refer a friend to trade with OctaFX, you get a chance to win a PlayStation 5, which I'm having a hard time as a gamer to find a PlayStation 5, and I have to settle for an Xbox Series X. Okay, we do have a deposit bonus going on throughout this workshop. So if you are subscribed to this webinar, I believe you are automatically eligible for it. If you open an account, I don't know, is it by the end of this week? If that will be the case, the team from OctaFX can help out if you have any questions regarding the bonus deposit here. But there are promotions going on if you are subscribed to this series. Okay, right, first of all, you want to go to the trading platform. There are 3 platforms that's being offered. You got your MT4, you got your MT5, you got your C Trader. You know, MetaTrader comes with web platforms, so you can actually kind of run it on Mac, but it's actually not a full capable web platform. The C Trader platform is kind of different, because the web platform, if I'm not mistaken, because I used C Trader in the past, I don't know if that has changed, but the web platform used to be the same, exactly the same as the desktop platform as well. So you can actually use that more freely. But the MT4 is what people are more familiar with. You can actually find a lot of community around MT4 users. So there are a lot of custom indicators. If you're looking for custom indicators, I can assure you that there is one already coded for it. And if you want to use expert devices or automated trading that you want to run maybe on your own server, then you can use MT4. MT5 is newer, but a lot of the code base from MT4 doesn't kind of translate well into the MT5, so people still revert back to MT4. So you can look at the platform comparison if you want on this one here. All right, so MT4 is basically the way to go. It's kind of like the same as MT5 in all honesty. It's just that people are more familiar with MT4 there. So there are some changes. Most of the changes are from the coding side. So people just revert back to MT4. C Trader is a different kind of platform. it does have level 2 quotes. That means you can actually see what's the buffer in terms of 10 pips up and 10 pips down. You can look at the market depth there. There are just more advanced features in there, but it's just that there's not a huge community around CTrader. Okay, so all purpose and intent, they're all pretty much the same in terms of usage. Okay, which is not my focus tonight, because we are gonna go through the trading platform soon. There are competitions. So if you go to promotions right now, there are competitions for demo account as well as real account. I mean, I know OctaFX has been giving out cars in Indonesia and India, I believe, a couple of times this year. Those are part of the OctaFX 16 cars competition that's kind of ongoing. You got a champion one. If you're on a demo platform and you want to join in on the competition, you can actually do that as well. But I mean, giving away cars, that's definitely a great competition there. All right, so next round starts in the 5th of July 2021. OctaFX 16 cars is already up and running. This is a world contest, so I think the cars are going to be different depending on what your region is. But yes, there we go. I think the last winner is from India for a T-Roc, Mitsubishi Expander, Civic in Malaysia, Civic around the world as well. So those are the winners, and you can actually view the videos of OctaFX handling those cars on the YouTube channel as well. All right, I want to focus more on the analysis and education tab on the OctaFX side, because I want you to take a look at the trading calculator first. Okay, so this is where you are going to be able to look at the required margin, the pip value, your overnight swap fees, your trading fees. So for example, on Euro USD, I'm not going to go all the way high to 1 to 500. Let's just go to 1 to 200, for example. One lot is your standard lot size. Okay, so let's start looking at the lot size. Okay, when we go 1.00, that's your standard lot size. So I'm going to calculate that for you in USD. So your required margin just to open the position, that's one lot, or one standard lot, is 606. Okay, per pip value is 10. As I mentioned, this is your standard lot. So 1.00, if you type that into your trading volume when you open a position, this is what you're going to be looking for. For every pip value, it's $10. Your required margin is 606.25. Now, if I were to change the leverage to 500, it drops down to 242.48. Okay, so I'm going to stick to 1 to 200 for now, for example. And if you're wondering, 0.01, okay, 0.01, this is your micro lot. For every pip value, it's 10 cents. All right, this is your micro lot. So 0.01 is your micro lot. 0.1, this is your mini lot. A pip value is $1. So your required margin is 60, 62. Now, some people are asking, how much should they deposit? The question would be back to you. How much or how big are you going to be trading? Okay, because if you take a look at this one, to open a position on the Euro USD on a mini lot, you're required to have $60.62. Obviously, you will need to have maybe about $100, $200, $500 to be able to make it okay. And if you're depositing with $100, $200, $500 to start with, just to play around with it, I would recommend if you train using a micro lot. That's a pip value of 10 cents. Your required margin is going to be smaller. It's not going to be crazy percentage out of your capital, because let's say if you start with 1,000, setting aside $6 is okay, but setting aside $60, that's already cutting into your percentage of your available margin. So yeah, take that into consideration, because this is already about 6% if you're starting out with $1,000. And a recommended when it comes to risk management, we typically don't risk more than 5 or 10% of your capital, your complete total capital. So the question that is easily answered with the bigger your capital is, the bigger your volume or lot size that you can trade. Okay, simple as that. Okay, So you got your trading calculator, profit calculator as well, if you do want to know what's going on. But really, this is it's not really important because your profit calculator is built into your trading platform. If you are away and you only have access to the website and you want to know the pricing, and take a look at this one here, the Euro USD. The spread is 0.9 right now. This is current price. GBP USD 1.2. So you can actually tell the spread from this. Okay. And where's the economic calendar? All right. The next one that I want to focus on is the economic calendar. All right, recent or next. There is a high impact news coming out, I believe. That will be the press conference from the FOMC state. There we go. That's 1830 GMT. You got your 1800 GMT, which is your Fed interest rate decision, which is not a key issue here. The monetary policy statement and the FOMC press conference is going to be the key trigger for tonight if you are trading tonight. So this is where you find out the high impact news through the economic calendar on the website. Make this your priority to check on this every day, at least once a week, so you know what's going on throughout the week. All right, and then you can go to your simple basic education, but most importantly, you can click on the webinars and you can actually find out that there are a lot more webinars that OctaFX is offering. Okay, so I'm gonna start with MT4, but before I do that, let me just go through the chat here if there are any questions that I can answer before we go on. All right, someone's from Penang. That's good. Kuala Lumpur. All right. We're not going to be covering market analysis in this session, so I'm not going to be discussing about Euro USD tonight. MT4 minimum deposit, I believe. I don't know. Is Team Octa gonna answer that? I think it's 100, right? Or it could be lower, depending on your region, right? All right. The essence of this session is for more on the platform rundown, so you know how to actually use the platform correctly. And also, we're gonna touch on some candlestick basic as well. So this is more for people that are just dipping their toes into the market. We are going to talk about risk to reward ratio later on. That will be on the risk management webinar. It will not be covered in this workshop, I believe, or at least we're going to touch on a little bit on Friday's session, but in depth, that would be on the risk management side. Okay, margin. Okay, we explained that. When do you get a margin call? Yeah, I already explained that, I believe. Terengganu. Okay, Pulau Terengganu. Lost 5 USD. That's okay. It's a learning experience. Malaysia, hello. How to calculate? Yes. This session, we're going to show you how to actually set those take profit level and your stop losses. But in terms of cutting your losses, that would be on more strategy base, which is going to be on a different webinar. Okay. How do I trade with an Android phone? Look up. You can actually click on the link in the description where it says start trading. That's going to take you to the Google Play Store to download the app. Okay. If you have a low capital, like below $500 capital, is it normal, realistic if you have a $20 20% target per month? Look, 20% target, it's dependent on your capital, right? I mean, if you have 500 and you're targeting 20%, that's going to be the same if you have 50,000 and you're targeting 20%, right? It's technically the same. So it's going to come down to your lot size. And is it an applicable target per month? That would be different from traders to traders. To me, it's okay. 20% a month in terms of Forex is all right, but if you try to do that in the equity market, it's kind of a bit hard. If you fail to achieve, I mean, don't set your target to 20%. Try lowering it for a bit, okay? Maybe 5% or 10%. If you can get 5 and 10%, then you can jack it up to 20%. You got 20%, then you can jack it up to 30 if you want to. Okay. All right. Thanks, Michael, for helping out with the answer on the minimum deposit and how to get the bonus and stuff. Okay, new in trading, some friends have never activate one. Okay. Is it possible to use TapTop? Do you have only currency in Octa? No, we actually have we do have the Dow index as well as crypto, which we are gonna cover soon. Okay. All right, let's go. So this is your MT4. This is your. I'm gonna hide my face here for a bit so it's not distracting. There we go. Okay. Sorry. I'm having a bit of a cough here. Okay, if you guys want to know what's available to trade on the standard setting, this is what your MT4 looks like. Under your market watch window, there's all the symbols. You can right click on it and then go to symbols. Okay, this is what's gonna pop up. If it's yellow, it means it's on my list, but here are your available instruments to trade. Other than Forex, we do have crypto, indices, metals, and energy. So under Forex, pretty much all the major or currency crosses are going to be there. Even exotics like Euro, South African Rand, right? But it's all there. There's major currencies are there. Cryptos, you got Bitcoin Cash, Bitcoin, Ethereum, Litecoin, Ripple. So all the major coins are there. The altcoins are not there yet, but it should be coming in the future. I think as time goes, Octa is definitely gonna expand on what's gonna be an available asset class for you to trade. But you got Bitcoin, your Ethereum, your Litecoin, your Ripple. These are your 4 major coins. Small altcoins, there are too many altcoins there. One of the reasons why it's sticking to the main ones, because for safety concern. All right, you got your indices. This is not a full list of the indices because this is running on a demo account, but the full account, you do have access to other indices as well, not limited to the Aussie 200, German DAX, Nasdaq, and US 30. You got your JP225, you got your I believe you got the FTSE as well. If I'm not mistaken, there are 10 indices that's going to be available in the full account. Okay, so metals, you do have your silver, you have your gold, your energy, you got your gas, you got your Brent crude oil, you got your WTI oil, or which is the US oil or the UK oil to some people. Okay, so this is how you do it. If you're not trading it and there's just so many stuff going on, you can just double click it. If it's gray, then it's taken off the list. So I'm going to take off quite a few on the list here that I'm not going to be trading. For example, the rands, I'm going to be doing that. Studying Canadian, AUD. Okay, it's not letting me do it. All right. Okay, let's hide. Okay, there we go. You can use hide as well. So I don't want Euro AUD, Euro Swiss. I want to hide that. Okay, Euro New Zealand. I don't like that. I'm going to hide that. So as you customize it, your list is going to be different. Okay. If you want to open a chart, you can right click on it and you can select chart window. This one has GBP USD open. But if I want to open a new one and I want to do it quickly, let's say I want to open up a Bitcoin chart. I can just click and drag it and it'll open up a Bitcoin chart in here. And underneath, these are your charts that you open. Okay, I got my XTI, I got my Sterlings, I got my Canadians. All of your charts are open there. So just a brief introduction. I don't like the standard black and green because it's kind of like it's a bar chart and people don't really use bar chart nowadays. I don't like the grid, so I can right click on the chart and click off the grid. I can go to properties, I can change it to some of the themes that's already available, yellow and black, green on black, black and white. I prefer black on white, it's just easier on the eyes. And this is still a bar chart. If you want to change your charting, you can go to the top left corner there. You can change it to candlesticks. You can change it to line chart if you want to. You can click this to zoom in or zoom out. I prefer to use a keyboard shortcut plus to zoom in and zoom out. Okay. This is arranging your windows. It'll look like that. That's all the windows that I have open. So there's a lot of stuff going on. And if I double click this, I'm back to being a full screen one chart. Okay. The green button, the play button, means that it's gonna scroll to the current price. Or if, for example, if I'm scrolling back and I'm way too far, I'm in March, in February, I need to quickly get back to where I am right now, as in the price movement right now. I just click on the play and I'm taken back forward. The next button is shifting the end. For example, over here, if you take a look at this here, there's not a lot of space to figure out what's going to happen next. I like to have this one on, then it'll just shift my chart back a little bit. So I can use my Ichimoku Kinko here to predict what's going to happen. If I'm going to draw a Fibonacci line, for example, I can kind of figure out where I'm going to be looking at next. So for example, if I am going to draw this on Bitcoin, I'll be doing it from here to here. Then I can see what the price level is in the future, where it's going to go. You know, it just gives me a lot of room for me to analyze what's going on in the market in the future. Okay. Bitcoin is probably not a very good example to use on trading. In any case, let's say I go to let's say I'm going to go black and white. I don't like the grid, and I want to add, I change this to candlestick, right? So I want candlestick, and I want to add let's say a moving average, and we typically use moving average. Let's say I'm gonna put in 100 exponential moving average, and I want to have to be red. I can have it thick like this, and I can edit. Then I can right click, go to templates. I can save it as template. Then it's gonna save that template for you. Anytime you want to load up template, for example, the one that I normally use on how I look at the chart will be like this. It's gonna look like that, and in this example, I'm just gonna use it. Okay. So if I look at the pound US dollar right now, what time is it right now? It's for 1947 over here. Let's take a look at the 50-minute chart. Okay, let's say this is your position size. I'm currently locked on to 0.1. Okay. Let's say I do open a 0.1 and I feel like, okay, the market's gonna go down soon. I can just click on sell. Okay, first time doing that, this is gonna come up. You accept the terms and you click OK. I'm gonna open the terminal window. So I got my trade there. I haven't executed a trade. So you got your balance, your equity, your free margin. This is you wondering what the free margin, equity, and whatnot is. Let's say I open a position right now. I'm gonna sell, and just like that, one click, I have a position open. Okay. You see what's going on here? My equity starts moving down because I have a negative 1.6. The margin that I use is 28.23. Your free margin is 4,969. Your margin level right now, which is to get to 25%, is really hard on something like this, right? Because right now my margin is like 17,000%. So in any case, let's open a bigger position so you can actually see what's going on. I'm going to open a standard lot position. You can see the difference here straight away. My required margin just jumped up to 310. Okay, so that's significant over there. So I want to focus on the terminal window. Don't look at the chart first for me, okay? So if I open a big position here, 10 standard lot, my margin right now is 3,000. My free margin is 1,692. If the market keeps going against my position, I'm gonna have a negative 1,600 here. That's how much I can lose in the market. My margin level right now is 151. So if this goes on, I could get a margin call very quickly. And I could have been realizing I made a wrong proposition here and I need to close some of my position. If I need to free up my margin and I look at the position, something is wrong here, this is going against me. Okay, if I close my negative 230, see what's going to happen here? Look at the balance. Okay, right now it's at 5,000 because I haven't closed any position yet, right? But if I were to close a position, that's going to change. This is my equity. If I were to close it now, this will be my balance. Okay, so I'm going to close the 130, which is negative 130. Okay, now negative 40. Let's wait a little bit. We'll see if it turns positive, and then I'm going to close it off. Okay, there we go. I'm at 0. I can close it off right now. My balance is now at 5,000 again because I just closed it at 0. But look at my margin level. It's now back to 1,600. All right, I'll take the $7 loss right now. So my balance is going to change. Okay. There we go. Hold on. Why is my balance not changing? It should be refreshing. Okay, let me just reopen the terminal window. It should change. Okay, it's not, but it should be updating. Probably something wrong with my demo account, but it should be updating. My balance should be lower than that because I just took a $7 position loss. Okay, sorry, I probably closed it at 0. I just took $1.30 loss there, and you can see the balance, and I don't have any open position. My balance is now the same as my equity. Okay, now I want to do that again right now. Just give you an example. Let's open a 0.1, and I want to sell. Okay, my equity starts moving again. My balance stays the same. Whatever the market is, that's what my equity is. Okay, the margin requirement is here. Your free margin that's available, or before you get a margin call, that would be here as well. So I can let this trade running for a bit because I'm looking at the momentum here. In terms of the short-term momentum, I think we could be seeing the price of pound going down a little bit. So we're gonna move on, and we have this running right now, and then I want to set my take profit level. For example, I want to take my profit over here. All I need to do is just click on that green line there and drag it down. Okay, this would be my take profit level. If price gets there, the position is going to get closed automatically. And I want to set my stop loss. If it goes beyond a certain price level, I'm going to have it beyond the swing high here. So that's it. I just set up my stop loss here. I got my stop loss at at 1.4134. So if price gets to 1.4134, I'm gonna get stopped out. If it goes to 1.40995, then I'm going to get closed out of my position with profit as well. Okay, so I can adjust this by just dragging it. So if I want to minimize my risk, for example, I want to drag it down a little bit lower, I can move it like that, and the stop loss changes as well. If it's sliding up, that means it's about, or it's very close to my stop loss, so I need to drag that up again to move it back out. Okay, but let's say if I take a look at the market, if I zoom out, there's a potential for me to take the potential profit maybe a bit lower over here. All I need to do is just drag that. It's going to get changed automatically. Or if you want to be specific, so for example, I want to take my profit at 1.4050, then I can just double click this. I can change it over here. I can type in 1.4050, and I'm going to click modify, and that's moving my stop loss all the way over here. Sorry, take profit over there. Okay. If this button doesn't come up, you can just Control Alt T. Okay, that's gonna bring that buy and sell button there. So yeah, so it looks like I'm right in how I look at the market, and the market is now moving down a little bit. So I'm just gonna lift this for a bit longer while we go through all the other stuff. Okay, this is your indicator list. It's also available on your navigator list on the left hand side over here. So if you take a look at the navigator list, you can actually look at all the different indicators that you're going to be using. If you are new to technical analysis, indicators are tools that you use to figure out what the market's going to do. So there are a lot of things to cover. There are a lot of things to learn if you're brand new, but the options are there. If it's not available over here, you can always download the custom indicator. That's by going to your terminal window where market is. If you click on market, okay, this is not working for me. Okay, it's loading right now, so there we go. All right, I'm gonna go to market. I can go to experts. Experts means expert advisors or automated trading. I'm trying to resize my window here. Why is it moving like that? Okay, so I can go to indicators. I can look at the different indicators that's available. I can look at the online libraries if you want to. You can have it all there. Okay, but if you want to download indicators, you can buy, or you can get the free ones as well. Okay, you can go sort it out by new, so example free. So I can have the trend monitor. I have the traditional MACD, for example. This is new. I think they just updated it. This used to be just a blank lines, but it's all there. You can just click on it. You can download it. Okay, but let's go back to trade. Okay, minimize this. The next one that we want to move on is your periods. Okay, you can change it to 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, weekly, and monthly, which is also right over here on a separate window. Okay, so it's all there. And all you need to do is just click on the 1 minute time frame if you want to look at the 1 minute time frame. I normally look at the hourly time frame. I want to look at the hourly time frame. Okay, the 4 hourly. The daily, if you want to switch around, that's completely fine. There's a fib drawn there, but let's get rid of that. And we're going to go back to 50 minutes just for simplicity's sake. So here are your time frames. Okay, these are your templates that you save, which is obtainable by right-clicking and going to templates as well. Time frames is also accessible by right-clicking on the chart. The one-click trading as well, you can do that. Okay, you can look at the depth of the market as well if you want. But this is much more useful if you are more of an advanced trader. Otherwise, it's not really that useful. All right, so I'm running on a $4 profit right now, and I think I want to close my position. You got a couple of ways to close the position. You can right click on it and close the order. Okay, but there's a quick way. There's an X here. I can just automatically close it. Right, I closed my position. I had my losses overall, and now I had a little bit of a profit, and I'm now up by $2.70 from my capital. But you can always look at your account history and actually find out what happened here. I closed my position at 0, one at negative 130, the other one is at $4. My profit and loss is now $2.70. My deposit is $5,000. My total balance right now is $5,002.70. So it's just as simple as that. So take a look at this one here. If I open a position that's big, take a look at the free margin. That's gonna happen. Okay, automatically what's gonna happen is that I used up 3,000 of my account just to open one position. So if you if you kind of open a big position that's too much for your account to handle, it could go both ways, right? If I'm right that the market is going to go down right now, I'm going to make a lot of money in a very short period of time. But if I'm wrong, I just used up 60% of my account in a single trade, and that is crazy, right? And I only have a room of about $2,000 before it hits my margin call. So you can take a look at the damage that's being done to the account right now if I miscalculate my position size. Okay, I was profitable, and if I were to, oh, this is wrong right now, I'm gonna close my position out. See what's gonna happen right now? My balance is devastated. Okay, I just lost about close to 10% right now because I opened a position that's too big. That's way too big for a $5,000 account. For a $5,000 account, 0.1 is probably your maximum trade size. Even at one lot size, you're putting a lot of risk on the account because that will be $10 per pip. Okay, your free margin is all right, your margin level is all right, but it's up to you what you want to do. Because if you take a look at the account history, just opening up one single trade that's too big, it's damaging my account really badly. Well, a lot of people are complaining that, oh, you know what, brokers are scammers and whatnot. All of it pretty much comes down to yourself as a trader, whether or not you understand the concept of trading, the concept of lot sizes, and this shows the importance of understanding risk management when it comes to your trading. Because if you don't understand what you're doing and you open a position that's too big, you are going to be on the losing side pretty quickly, okay, which is something that I just showed you. Okay, so that's just a bit of a fair warning in terms of how margin works, your free margin, your margin level. Hope you get a good understanding of that. You know, I really don't delve too much into it because it's all there on the chart, on the platform for you to see. You don't actually need to calculate it yourself. It's already there. You all just need to stare at it because it's given there. Right now, my margin level is at 1,626%. That's all right before I get my margin call at 25%. Okay. All right. So next is service. Service, because I'm looking at customer service there on the chat. The next is your cursor, your crosshairs, your lines, your trend lines, or whatever not. These are your drawing tools. All right. So crosshairs means you can take a look at the price there. What time is it vertically and horizontally? What price is it? And if I click and hold, I can actually drag a line, and it'll actually tell me how big that range is. It's at about 98 pip. This is useful if you want to gauge how big a range is. Just click and hold and just drag it around. Okay. Right. The next one is your vertical line. Okay. Horizontal line. These are your simple basic trading tools. Trend lines, which is something that we're going to cover on a different webinar when we start talking about trends. This is how what a trend line looks like. You can have it you know, like that without the end there, or you can double click on it, go to trend line properties. You can set it as array, then it'll just continuously draw it there. So I can drag maybe there and it'll automatically draw the rest for me to the top. Now I don't like to use it as array because I like to use trend lines to illustrate a lot of things. So I'm going to leave it without the array. Okay, if the tools are not there, for example, if you want to draw a rectangle, you can do that. But if it's not there, then you can right click on it. You can go to customize. And this is going to pop up. This is what's available. This is what I have selected up here. You can insert or remove it. I don't like to use arrows. I'm going to remove it. Maybe I want to add triangle in. I can insert it and you can see the change there. There's a triangle now that I can use. Okay. Gann line, Fibonacci time frames, Fibonacci arcs, Gann grids. It's all there. I like trend line by angle as well, but I'm not gonna add a lot because I already have a lot in here. Fibonacci channel, maybe I can hide that here. Gann fan, I'm gonna hide it. Okay, so just have what you normally use. Okay, so text label, I don't use it. I use a label a lot more. Okay, so I can just mix and match, make it your own. And that would be the whole process of using the chart. Right. Going back to having an empty chart, if you want to use indicator, I already showed you the moving average, right? Moving average is simple. Just double click it, or you can just click, drag, and drop. So which is what I'm doing right now. I'm just dragging it over here and dropping it. You get the option. You can change the period. The calculation method, simple, exponential, smooth, linear weighted. Okay, applying it to close, open, high, low. I would suggest applying it to close. Okay, click OK, and it's gonna get added in. Okay, and then we have the oscillators, which is gonna create a new separate window. I typically normally use a stochastic oscillator. Okay, I'm just gonna leave it at 1455, which is the setting I use. If you want to know what my setting is, my setting for stochastic is 1455. So that would be on a separate window. Now, that window, obviously you can adjust it because this is on a different scale. If you just need to take a look at the momentum briefly, maybe you can minimize it. Otherwise, you can just drag it all up if you want to pay close attention to what's going on. Again, you can draw a trend line on the secondary window as well if you want to find out if there are going to be divergences in the market. And if I'm confusing you with a lot of terms, that would be for future webinars where we go deeper into analyzing the market. Okay. So right now I'm on a 4,622 position right now. I got a negative 40. I don't like where this is going. Maybe I can close it out. That's fine. See, I'm closing a $40 account and my account history is completely fine. If you take a look at it, it's still damaging, but it's not as damaging by over leveraging and having a huge position when you don't have enough capital, because it's going to hurt you from a capital risk perspective. Okay. So all of this are just for example purposes. Do not follow my trades. This is just me illustrating the damage that you could be doing to your account. Okay. Whew, that's a lot. Okay. So that's about it for the MT4 platform rundown. If you have any questions that you might have about MT4 platform rundown, that would be the right time right now to ask me those questions. Otherwise, we're going to be moving on to candlesticks. All right, I'm not quiet. I'm just reading through the chats here. So yeah, there are DAOs in here. I believe I've got one here open. That's the Dow Jones Industrial Average there being open. This is an English session. I believe there is going to be a Malay session, right? On the YouTube channel doing this as well. What are basic tools that a beginner need? Candlestick, simple, which is something that we're gonna talk about now. What we're looking here, if I have it blank, just like this itself is enough to tell me that something is wrong here. That's the reason why I actually went short just now, because you can see the rejection that's going on. But we're gonna take a look at that soon. Okay, basic tools, don't go too deep. Understand what you're looking at first, okay? If you take a look at this from a different chart perspective, it's going to look different. Line chart is basically one simple moving average. So if I put in moving average 1, and I'm going to set it to simple, it's going to be exactly the same as a line chart. Okay, so if you're wondering what a line chart is, it's actually just one simple moving average. Okay, it's basically just the average of price there. It just simplifies what you're going to be looking at in terms of direction of the market. Okay, there are different use of charts, but understanding what you're looking at is basically the priority here tonight. Will I teach indicators? We are going to cover candlesticks tonight, but future more advanced indicators, that's going to be on a separate webinar, because we don't have a lot of time for that. What time frame are we using would depend on what kind of traders you are. If you are more of a swing trader, that would be more on the hourly and daily time frame. If you want to trade within the day, you need to be trading the 15 minutes and the hourly max, because otherwise it's not going to be useful in terms of trading. You can use TradingView to view the charts. That's completely fine. In terms of execution, you can do that on the mobile. That would be easy. So it's just a matter of preference. Okay. It's being advisable to enter a low lot 0.01 for small capital. Yes, it's very, very much advisable, because I just showed you if you do open a big position, even with $5,000 account, it could just hurt you instantly. Okay. This is not a lecture to make it so serious, but you can rewatch this again later on after we're finished with this, so that's not a problem. If you're late, that's completely fine. Do not be sorry. I'm happy to have you here, even though you're late. That's completely fine. Okay. Just looking. Candlesticks, you mean price action? That would be one way to look at it, but we are going to be looking at candlestick patterns tonight. So that would be hopefully going to be helpful. All right. What time frame is best for beginner? Hourly time frame is best. It's not too fast. It's not too long. It's not too big of a risk sometimes, and it's not too complex. And in terms of hourly time frame, the reason why it's hourly, right now, what time is it wherever you are? Where I am right now, it's 8 past 10, 8 p.m. past 10. It's gonna be rare, but some countries have a GMT of 0.30 at the back, and that's gonna shift you about 30 minutes. If that's the case for those countries that has that, then that's where 30 minutes come into play. But other than that, wherever you are right now, it would be the same hour, right? How long can a position be kept open? That would be depending on your trading strategy. Some people don't like to have it open for more than a day. I like mine to be open for more than a day, but normally I don't keep it for longer than 2 weeks. So I'm kind of a hybrid between a swing and a position trader, but I am definitely not a scalper. I'm definitely not an intraday trader. Okay, that's my point of view. All right, see, on your low fare, you just say it's 210. I'm at 810, right? So the hourly chart is going to be the same wherever you're from. See, in Nigeria and over in Asia right now, we're looking at the same hourly candle, no difference. But it's 640. See, India is shifted by 30, right? So those in India might want to consider looking at the 30 minutes, but the hourly is going to be what the world is going to be looking. And now, if you want to be right in terms of trading, you want to be right in terms of the mentality of those that are trading the market. They look at the market, and if a lot of people are looking at the same thing, then it just becomes much more efficient. Okay, so that's about it for the platform rundown. We're gonna rush quickly through the candlesticks. So hang in there. All right. So what is candlestick? Candlestick is commonly used in Japan and Asia. Basically, in the last 2 decades, it's not a decade. It has been about 2 decades. It's slowly it just replaced bar chart. So people back in the days, especially in the Western world, they're not familiar with what a candlestick is. And then they use a bar chart. Right now, the defaults in MT4 still reverts to bar chart, but a lot of the newer platforms or charting packages like TradingView and whatnot, they just automatically give you a candlestick, because a lot of people are just looking into candlesticks right now. The problem is that 80% of retail traders uses candlestick without understanding what it's for. Okay, so it's very similar to bar chart with there's an open, there's a close, there's a high, and there's a low. These are the 4 information that we call the open, high, low, close type of candles. And it'll become very apparent on why it's useful, because it'll form a body as well as a wick or a tail. And this is why we call it a candlestick pattern, right? And we call it candlestick because it has a body and a wick, just like a candle. It's overlooked by most traders when using candlestick chart, because to me, candlestick chart is an indicator. Okay, it's not there just to look at the chart. It gives you a better understanding. It gives you a clear understanding of what the market is. Let me just show you again. Would you be willing to look and stare at this? Okay, which is easier to the eyes, compared to this, which I don't know what's going on, because I don't know what price is, because it's just one line. I need to keep taking this to figure out where I am right now. Or would you prefer to look at this, where you don't even know which one is up, which one is down? It just looks all the same, right? In reality, what we're looking at here, you can see there's a left line going out, there's a right line going out. It's actually the same as a candlestick. What candlestick does is it just draws you the body of it, right? Okay, so this is an example. I'm going to switch the candlestick. You'll take a look at it, okay? So it's just an easier way to look at the market. It's essentially the same as the bar chart. It's just an easier way to look at it. Okay, candlestick is old, like really old. It's probably one of the first charting methods that's being used. 17th century Japan, I believe they used it. But yeah. So again, it's overlooked by a lot of traders because they don't even know what candlestick is for. It's actually used to identify market sentiment and demand. So when you just now there was a question whether it's supply and demand. Yes, you'll understand the market sentiments towards supply and demand. It's also easy to understand. It'll also provide you with early detection of trend changes by showing up with patterns. So this is what it looks like. Okay, on the left you have what we call a bullish candle, which has an open at the bottom and a close at the top. Let me just get my pointer out. Okay, we got your open here and it closes up there. But before it closes up there, it went a little bit higher and then drops down. Okay, with a bearish candle, it opens here. It might go up, it might go down, but it ended up closing lower than the open. This is the bullish candle and this is the bearish candle, and as simple as that. So what is the main purpose of using candlestick chart? Its most commonly used patterns are reversal patterns. So the patterns that we're going to go through tonight typically are what we call reversal patterns, or changes in the market that's significant enough to form these patterns. It implies a likelihood of change in trend, but it's probably not a complete trend reversal because the trigger point, there are some other requirements, but it's just going to give you a quick glimpse that the market could be changing. Ali, do you mean except hourly chart, everyone's going to look at different charts depending on their physical location? Yes and no. It depends on whether the market opens in their region. The 15 minutes could be different. The 15 minutes is going to be the same. The 30 minutes are going to be different depending on the region, because, for example, India starts half an hour later or half an hour earlier than everyone else. So obviously, their chart is going to be different. Okay. The 4 hours is definitely going to get affected the most. The 50 minutes probably not affected much. 5 minutes and 1 minute is not. 30 minutes on the hourly time frame, maybe 10%, no, less than 10%, maybe 2% of the population are looking at the hourly chart differently. Okay, but normally generalized, the hourly chart is the key chart of what people are looking most of the time. But depending on your region, I don't know where you're from, you need to adjust that to your position. All right. We're going to go through a couple of patterns. With these are the popular patterns. You got your bullish and bearish engulfing. You got your bullish and bearish piercing. Some of the rules attached to it. So I'm not just going to tell you, okay, this is it. No, I'm going to tell you the rules as well. Okay? You're going to take a look at hammer patterns. You're going to take a look at doji. You're going to take a look at morning and evening stars. All right. This is engulfing. There are two types of engulfing, obviously, bullish engulfing and bearish engulfing. These are both a reversal and continuation pattern, but mainly a reversal pattern. When it appears, it typically appears at the end of a trend for a bullish engulfing, where the market, so the buyers kind of engulf the sellers in the market. There's a lot more bullish sentiment going on in the market. And the second candle has to fully engulf the previous candle's body. All right. So the second one here. So this is the first one over here, which is red. Okay. And then the second one covers the red portion of it. That's what we call the engulfing. The second one is bearish engulfing, where the second candle covers the bullish candle there. And typically it could be a reversal or a continuation pattern. Okay. So these are engulfing patterns. They're easy to identify. They're easy to look at. If we go to the chart right now, you can actually take a look at it. Like this one here, this is a complete engulfing. Okay. Second one is also a complete engulfing. The one over here, this is piercing, which is what we're going to cover next. If you take a look at this one here, it doesn't fully engulf it, but the market does go up. What's going to happen is, if you take a look at this one here, piercing means going above 50% of the previous candle. Okay, so these are the rules. These are set. Don't mess around with it, because there are rules. Depending on where it is, it's going to be called differently, even though they look the same or similar. All right, you got your bullish piercing. If it covers 50% of the previous candle, bearish piercing, which is also a different pattern in Forex, which is called a dark cloud cover. It is a key reversal pattern if you see something like the bearish piercing. Okay. Okay, I'm having issues with my screen right now. Hold on a second. All right. These are hammer patterns in an uptrend. So this only appears when the market is going up. Okay, the body of the candle itself can be bullish or bearish. Okay, if it comes up in an uptrend, then we're gonna name it differently. The Japanese are good at naming things. It's easier to understand, right? Bullish engulfing, you know, it engulfers the previous candle. Piercing, it pierces through the previous candle. Then the market goes up, and then we're gonna start calling this a hanging man. We're gonna call it a shooting star. Tell me if that's not negative. To me, it's very negative. I mean, someone hanging, obviously that's bad. A shooting star, something falling down. Okay. But this same pattern, if it does show up in a downtrend, then it's a completely different sign. It becomes bullish. Okay, if it happens in a downtrend when the market's already coming down, then these patterns appear. We call them the hammer or reverse hammer. For simplicity's sake, I'm just going to show it here right now to you. So the market goes up. Okay, this is an uptrend. And then this happened. That's a shooting star. Just happened. Okay, and I was shorting the pound right now. If I had to hold on to my position in the pound, I would have profited. Simple as that. But take a look at it across different time frames. This is the hourly time frame. It forms that. If I go to 15 minutes, again, it forms that. Just on a smaller scale, right? But it's there. Okay. If I go to the 5-minute time frame, we have a completely different pattern here. The 3 candle here. This is something we're going to take a look soon. This is called the evening star, which we are going to cover as well very, very soon. So let's go back. Okay. This is the dark cloud cover. It basically only occurs in an uptrend. So only happens when the market is going up. Normally there is a gap, but in Forex market, because it's more of a continuous market, a futures market where it doesn't actually have an open and a close, except for the weekly open and a weekly close. Typically we don't see that gap happen, so it'll form something like a piercing pattern, and that would be considered as a dark cloud cover. This is the strongest, one of the strongest reversal pattern that you can see. If you see this happening in a major trend, that means something significant is going to happen. All right. Dojis are the next one. These are candles without bodies. It basically means that the market is indecisive in terms of where the direction is going to be. The buyers and the sellers have equal strength, but the wick or the tail end of it, it kind of gives you away. The longer it is to the upside, it means that there's a lot more selling pressure. If it's long to the downside, it means there are a lot of people buying it to push price up. So price might actually go down, and then buyers come in, they push it up. So it has a bearish and bullish connotation to it as well. Even though it doesn't have a body, it gives you a sentiment indicator. It'll tell you which one is actually stronger, the sellers or the buyers, and which side you want to be on. Okay, which we're going to show again in the chart later on. All right. Sorry, this is morning star. This is a bullish reversal pattern. It will only occurs in a downtrend. The first candle has to be a bearish candle. The second candle can be a doji or hammer. You want to screenshot it, feel free. It can be bullish, it can be bearish, or you know what, my recommendation is rewatch the video again if you want to. Third candle needs to be bullish, and it needs to close at least 50% of the first candle's body. Okay. This is an evening star, which is the pattern that I just showed you just now on the 15-minute chart on the pound USD. This is a bearish reversal pattern. It only occurs in an uptrend. First candle is a bullish candle. Second candle is a doji or hammer. It can be bullish or bearish candle. The third candle is bearish and closes at least 50% of the first candle's body. And I'm going to show it to you right now on the chart on the 15-minute time frame. There we have it. Okay. So this 3 candle here, it actually forms an evening star. So if you take a look at the whole general market, if I zoom out, you can tell the market is actually moving upwards, right? And then that pattern shows up. Now here's a warning sign. Before all this pattern shows up, you see what's happening here? There's a lot of hammer patterns. There's even a doji here, some shooting stars as well. So another doji there. So we're starting to see indecision in the market before a major pattern forms. Okay, so we need to be on the lookout for these candlestick patterns there. So they're not just there to be fancy, not there to be just colorful. It's there to tell you a story. It's there to help you out with your trading. So do not ignore these candlestick patterns. It could be very simple. Some of you probably know and learn about this. Relearn it. And there are books out there that you can read specific to the candlestick, learning candlesticks. All right. Okay. So this is an example of candlestick patterns on the US 30. This is quite old. This was taken in 2016, but it's always a good example here because you can see, back in 2016, I actually have been using my Ichimoku and stochastic as my indicator for a very, very long time, since I think 2007, when I actually start fully utilizing just this indicators on my trading plan. But take a look at the candlestick patterns here. This is what we call the duck clock cover. We got another duck clock cover. So you got two duck clock covers, and then you see the market drops down. And then what you see here is you starting to see hammer patterns. You start seeing bullish engulfing, and then the market starts picking up again. Okay. So here's another example. This is support and resistance plus candlestick. So for example, I have the wick tail there stopping at this level here at 2,600. This is silver, when silver was still very expensive. This was taken a long time ago, right? Then I can start drawing a support trend line from these two lows there, and I can use this to be my target level in the future. Once I have my bearish engulfing, I can take a look at where it's likely going to bounce, because it bounces off once, twice, and I'm expecting this to hit and bounce, which is what happened over here. That's support and resistance with candlesticks. You got your trend line rejections and candlesticks. Once we get deeper into technical analysis, we're gonna start learning about trend lines, and then we're gonna see what is a rejection and whatnot. See how the trend line forms, and the candle is not able to come above that trend line, then it's gonna start rejecting. Now when that rejection happens, you can see the shooting stars, your bearish engulfing starts to form when the trend line rejection happens, and then the market reverses. So there's a lot that comes into play when it comes to technical analysis. I'm just opening up a small gap in the door for you to pick into what technical analysis is tonight. So don't expect that you're going to master the market and be done with it once you're done with this workshop. This workshop is for you to build your foundation when it comes to trading, so you understand what you're dealing with. We talk about that on Monday. Today you're familiarized with how to set a stop loss, how to open and close a position, how to basically look at candlesticks and start learning to get you prepared for the more advanced technical strategies or indicators that we're going to cover more in the future. Okay, so this is your stepping stone. As the title say, this is your first steps in trading. Okay. All right, Fibonacci ratio. We're definitely going to talk about Fibonacci ratio, but we just don't have the time to talk about it right now. But you can use it as in combination with candlesticks. For example, you got your gravestone doji. After a certain level, 23.6% in this case happened. There's a rejection that happened, and rejection forms a gravestone doji. Okay. You can see that all over the whole time period. You got your morning star over here. You got your bullish piercing before the market goes up. Market goes up. You got your duck clock cover. Market goes down. You got your bullish piercing. Market goes up. You got bearish engulfing, and then the cluster of shooting stars over here, and the market goes down. And then when all the way down, it forms a series of dojis and hammers and reverse hammers. That means buyers are coming into the market. This is an EU summit. This was for the Greece exit. This is back in 2012. See, I'm keeping these old charts for future references, because we can learn a lot about this high impact historical moments. The Greece accident that happened in 2012. Those of you that are from Turkey, I believe there were some of you in Turkey. This would be very close to you. I believe it's close to the Mediterranean area. So EU summit results comes up, the market goes up, everyone starts buying it, and then the bearish engulfing happen. That's gonna trigger a further drop to the downside. But if people are not familiar that there's a bearish engulfing that forms here, they're not gonna be cautious about what they're doing. They're just gonna keep their position long, and they're gonna be scratching their head. Why am I losing in my position? Okay. So this is how we use candlestick. This is a brief, quick rundown. Your first peek into what technical analysis is. This is basically a price action based type of analysis. All right. So that's all for tonight. Now, if you have any quick questions, please do type into the chat regarding what we covered tonight. Please don't ask me to tell you where the Euro US is going to go. We're not doing a live trading session right now, so avoid those questions. Ask me anything about what we covered tonight. I'll be more than glad to answer that for you. No pattern is going to work 100%. There are warning signs, and you need to trade that as a warning sign. Okay, so do not take candlestick pattern as 100% guarantee. They are not. Okay, but it'll give you an indication. But you can see the probability of it happening time over time again. Nothing is ever 100%. No strategy is 100%. If someone approach you and say, I have 100% winning strategy, that is BS. Walk away. That's just scamming. All right. Reality of the trading is you have to accept your losses. I have close to 20 years, right? Next year is going to be my 20 years in terms of trading. And I can assure you right now, I don't have a 100% winning strategy. It doesn't exist. All right, chasing after that holy grail, or falling into the tricks of people telling you, hey, invest with me, I can make you 100% return in blah 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 blah, or guaranteed. The moment you hear the word guaranteed 100%, forget about it. They're just playing around with you. How do you start earning in OctaFX? You start earning by opening up an account first and then practicing, and then you start trading. Even with micro lot, you're already winning. All right. How to trade? I just showed you how to actually execute a trade and how to put a stop loss, how to put a take profit. How do you start trading? You're just opening your platform and then clicking buy or sell. that's oversimplifying it. There are a lot of things into it. But if you don't execute it, you don't experience a trade, you're not going to find out whether this is going to be for you or not. What is the parameters to set for Ichimoku Kinko here? The parameters to set for Ichimoku Kinko here is going to be standard. I'm going to show it to you right now. It's standard. Do not mess with Ichimoku settings. We covered this in a different webinar specific under Ichimoku, but that's going to be covered in a more advanced classes. This is like super beginner, but if you guys want to know, do not change the settings. Tenkan needs to be 9, Kijun needs to be 26, Senko Span B is 52, and that's it. Do not change it. I know some of them out there are going to be changing this to 7, 21, and 42, I believe. But just leave it at 9, 26, 52. Do not change it. Heard somebody talk about foolish engulfing as bullish order block, and I was getting confused. Please, if there is no such thing as that. All right. There is no such thing as an order block. Bullish engulfing is just bullish engulfing. We need Ali, we need to cover Ichimoku in a different session. It's not something that we can cover easily. It took me, I believe, with the Indonesian viewers, I need 3 sessions to cover Ichimoku, just the basic part of it. Yes, you can definitely see the recorded session again once I'm done with this session. It should be up for viewing again. What other indicators makes it best with Ichimoku? It depends. It depends on your strategy, but I definitely want something of a momentum indicator, and I have stochastics. As an oscillator, you can have an RSI or a MACD if you want, but I just need that. Okay. In and by itself alone, Ichimoku. This is simplified version of Ichimoku. Let me show you what Ichimoku looks like. Actually, let me just show you. Seriously, if you guys really want to know what Ichimoku looks like, I'm gonna show you now. This is what it looks like as a complete whole. It's a mess because you got 1, 2, 3, 4, 5 lines and then 2 different clouds, and every single one of them has actually a different meaning. You don't actually need to use other indicators, because this Ichimoku Kinko here is actually used in Japan just as an individual indicator, but we do have the Western understanding or the know-how. That's why we can add other indicators, but that will be dependent on whether you want to use it or not. Okay, I definitely want to have a stochastics or at least an RSI to figure out what the market momentum is going to be, so I know what's going to happen in the short term. All right, which is more beneficial? Technical analysis or fundamental analysis? It depends. If you have background in finance or economics, then fundamental is going to help you a lot. If you are a short-term trader, technical analysis is going to help you more than your fundamental, because there's a fundamental delay effect. That's going to be 3 months to 6 months. Fundamental is more of a guideline. For example, the FOMC statement, FOMC press conference soon, in a couple of hours time. That's more of a fundamental event. You need to understand fundamental, technical, and psychology of trading as a complete whole before you can actually tackle on the market. So do not ignore the fundamental side, even though you need to kind of pick it up along the way once you grow as a trader. Can you enter the trade anytime you want, or must you allow that time to finish in case you came late? Yes and no. You can find re-entries on different timelines, but typically if you missed out, I would say don't chase after a trade. If you miss out, that's fine. If you think the risk is too much, and it's not worth taking the risk, don't take it. Simple as that. So the best advice I can give you for those starting out is always measure what you're risking, always measure what you're gonna get, and then decide whether it's worth it in terms of the risk and the reward. What if you are a finance background person and also proficient with short term? That's a bonus, right? It works both ways. If, for example, if I am a short-term trader, but I know my finance, I can take advantage of the news. For example, tonight, if FOMC comes up with a statement saying, by the way, if you're not watching this live and you're watching this on another time in the future, that's not going to apply. Today's the 16th of June, 2021. Okay, there's going to be an FOMC statement coming up soon. If they say inflation is going to be a problem and they admit that, that's going to trigger an inflation fear, and that's your cue for short-term traders to take advantage of the inflation fear. Because what happened with inflation is, if they admit that there's going to be inflation, the US Treasury bond yields is going to go up, the US dollar is going to get stronger. Short-term traders can take advantage of that fundamental moment. Oscillators is just a term for a chart. Oscillators is something that goes up and down like this. That's just that. It just goes under a different section of indicators. So if you take a look at a volume indicator, you got your volumes, you got your on balance volume, accumulation, distribution, right? You got your standard trending tools, which is your average directional index, Bollinger Bands, Ichimoku, moving average, okay, all the stuff. So this is just the tip of the iceberg. I just showed you a door to a completely different world. If you get deeper, then you'll understand, because there was a question just now asking whether this is price action based. There are actually two different categories of technical analysis. One is price action based, the other one is indicator based analysis. Is there any exception by forming these candlestick patterns trade gone in negative ways? Yeah, there's going to be a lot of exceptions for that, because as I mentioned, it's never going to be 100%. Is it true we get very less entry points if we strictly follow Ichimoku rules? Okay. Yeah. Because you're going to be very late if you want to trade through the clouds. That's why we have the Kijun and the Tenkan to actually give you a possible re-entry into the trade, which we're definitely going to cover in Ichimoku session. Thank you if it does help. What do you say about hedging? Depends. If you need to hold on to a position and you think like the FOMC statement is gonna have a short-term impact on your position, for example, and you need to hedge temporarily, that's fine. But if you hedge it forever, that's not gonna be useful for you, right? Because you're not really earning anything. I'm pretty sure OctaFX MT4 is the same as other MT4. It just has a different symbol to it. MT4 is pretty standard across, MT4 is just MT4. Do I have a bias in different currencies? If so, how do you get to form your long-term bias? All right, I do have my... Nelson, you're really asking a lot of good questions here. I do have my bias. I like a currency that's actually volatile enough for me to actually trade. I don't like currencies that doesn't range much. Like the pound USD and the sterling yen, the range is high. The dollar yen, I don't like it. I just don't like it because the range is small. Simple as that. The reason why I have that bias is because my trading strategy doesn't allow me to trade in a market that's ranging or in a market that has a smaller range. Time frame that's best for analysis. If you're a beginner, I would stick to the hourly time frame and daily time frame. Those are the two time frame for beginners to look at. It's a slower pace. Don't fall for the trap where a small time frame is the better it is, the safer it is. No, it is actually the hardest to do in terms of scalping the market. The shorter the time frame, the less clear the picture you're gonna get about where the market's gonna go. How can I withdraw from my wallet to my bank accounts? Team Octa, could you help with that question? RSI indicators help for scalping or not, depending on your understanding of RSI indicators. How do you want to use RSI? Because a lot of people use oscillators the wrong way. The right way is to use it with divergences in the market or divergences, and that's gonna be covered in a different webinar. Okay, very good questions. All right, I think we'll wrap it up for tonight. Particularly the buy stop, sell stop, the different sell limit and buy limit. Let's touch base on that back on Friday because we're running out of time. But on Friday, I'm gonna touch on some of the key fundamentals and what it means if you are new and completely new, and or if you never pay attention to fundamental and you want to know what triggers the market in terms of fundamental movement. Like this month, retail sales and CPI is what's causing the issue here with the FOMC tonight. That's going to be covered on Friday. Can trading robots work with OctaFX, and what's the risk of using trading robots? Okay, I don't like using robots to trade, or I don't like copy traders. The option is there for copy trading, which we're going to touch base on Friday in terms of copy trading availability on the OctaFX. It's just that because I just don't trust anyone else. That's just me. I trust myself, and I make it my responsibility to care about my own trading, about my own money. I don't like a robot to mess around with it, but that's not the case. If someone build it and I don't understand how it works, that's not going to work for me. I built my own system. I do my own robots. I code it myself. That's called algo trading. Or quants, whatever you want to call it, but I only trust my own analysis, my own methodology, my own trading plan, my own coding. All right, if you want to start trading, please click on the description link there. That's gonna get you to download the app, or you can open an account on OctaFX.com and you can start trading. You can tune in on OctaFX channel, because I'll be definitely doing more English webinars going forward. You can also contact me through speakers at OctaFX.com, but that's more on a topical session if I need you to submit something to me, more of a homework kind of thing. I'm not going to answer that question. That's a very tricky one. I said I'm not going to be doing market analysis, and it's not for me to say here, and it's not covered in this session. All right. Okay, look, we'll wrap it up for tonight. Thank you for attending, and I'm definitely going to be looking forward to seeing you guys on Friday. Well, we'll wrap things up with fundamentals. And yeah, and that would be kind of covering up the whole workshop on Friday. So our next session is going to be on Friday, same time. I'll see you then. In the meantime, stay healthy, and thank you for coming in. If you have any feedback that you want to do, please type into the comment after the show ended or the live session ended, and I'll be able to answer some of the questions that might not get answered tonight. If you like it, please type, if you like the video, thumbs up would be great. Subscribe would be great. Hit on the bell icon would be even more awesome, and it's all free. Feel free to do that. Have I made personal changes? No, I don't mess with Michimoku setting. Thanks Mika for the feedback. That's really awesome. Thanks Alexander. Yeah, I don't mess with the Ichimoku system. Look, it's been developed for 30 years, and you definitely don't want to mess it up. All right, thank you all, and come back again in 2 days time for the fundamental side of things. I might give you some example of what the FOMC statement is going to be tonight, so it's kind of a good week to be learning about fundamentals, because I'm going to put that in on the Friday session as well. All right, thank you all. Have a great morning, afternoon, evening, and I'll see you guys again on Friday.